Hello, this is Solomon Davis, Right Side Trader. Today is October 29th, 2023, and this is my weekly market review where I'm reviewing the S&P 500 on a quarterly chart, monthly chart, weekly chart, and a daily chart. This is all for educational purposes only. No trade recommendation here because, as we all know, trading is risky. You can lose money at trading. So please check with your financial advisor. Please check with your significant other and make sure trading is something that is suitable for you. All right, let's just jump right into here and take a look and see what's happening in this bearish market at this time. Yes, I said bearish market. Technically, we would say we're in a bearish market when on the monthly chart, we are below the 9 or 10 moving average, and that's where we're at right now. But let's go ahead and zoom in here and look at the rest of these charts and see what's happening here on this quarterly chart. We are getting a confirmation. Some people might want to call this a piercing type pattern or some kind of bearish type pattern at the top. We can also see that the market had a hard time breaking our R1 on the yearly pivots. These are yearly pivots that I have on here. And right now we're coming up to pivot. This is where, again, this is where it supports. Maybe not until we reach this level of and I'm saying we're below 4,200 already. I think we are below 4,200 on SPX already. We may get a bounce down around 4,000 or 4,050, because this is going to be pivot, and that can be our Christmas rally. But right now, us being at 41.17 and we're talking about 40.53, that's only 60, 70 points away. The market can be there by the end of the week. But the way this market has been going, people start panicking, start getting scared. This market can really take a really big move to the downside. So be careful, be mindful of your positions, be mindful of what you're doing, trade what you see. No trade recommendations, just kind of letting you see what I see. Right now on the monthly chart, as I said, we are below the 10 moving average. So we are in a technical bear market at this time. I can see based on these are quarterly charts. We had to just at the beginning of the quarter, we started out below pivot. I expect us to stay below pivot. We can come all the way down here. Again, this is supporting that support 2 level is supporting, that this market can come at least this low. You kind of expect a bounce out of here. This was the resistance level and ended up being, coming out of here, bouncing out here. So you may think this might be a demand level, but it can come into that demand level a little bit before it actually bounces. The question is going to be how much into this demand level is it going to go before it bounces and all. And me, definitely, like one guy said, I mentioned it last week in my video, that he doesn't see this market going above 4,500. And like I said, I have to kind of agree with him. I don't see this market making all-time highs now, like I was kind of expecting when we was having this bullish like run. But then once we hit this point, it's kind of like the wall now, and that's what I see. Let's go ahead and take a quick look at the weekly chart and see what we see there. On the weekly chart, this is getting back. I'm going to zoom in here a little bit. This was that bearish engulfing that I saw last week. I was kind of saying it was in the wrong location, but it is what it is, and it was what it was, and it has gotten confirmation. So again, these are monthly pivots. We are at the end of the month, so I don't expect us to come down here and bounce. But the thing that we're looking at is why I like having my charts the way I have them, where I can see my pivots for next month. I can see next month, come the month of November, that we probably will be opening below pivot. And if we're below pivot, I expect this market to go lower. So if we open in below pivot, coming down here, like I say, close to 4,000 is definitely in the picture. That's just what I see based on what has happened in the past. And based on what I see. So downside. That's what I see. Daily picture. One of the things that I've been noticing on the daily picture is once we had hit our wall up here, we had this leg down, we had a little bit of pullback, couldn't get back to this previous high on the pullback, So this is one. I don't know if you should really call that 2, but because again, it didn't break this low. But this is 2 right here. It broke this low, and all. And the points, I go from the top here. Let's say 45.50 down to here 42.50. That's 250 points. So if that's just leg 2 and all, this leg 3, you expect it to be 250 points or more. And so that takes it from, we'll say 4,400 to 4,200. That's 200 points to our 50 more points. We are there. And the question is, this leg is usually, the third leg is usually longer than the second leg. So going down even more is not out of the picture. How much more? I don't know. All I can see is that it's a higher probability that this market probably will continue to drop than it is going to actually bounce and reverse. We can see that we know our stochastic can hang out down here for a while before we actually get a reversal. So I will not be surprised with the stochastic hanging out down here for a while and this market continue to drop and all. So that's it. That's all I really want to share at this time. This is Solomon, Right Side Trader. Hope you guys had a great week. Hope you guys are having a great weekend. And I'll talk to you next week. Have a good one. Bye.